For more on Robinhood's IPO, let's bring in former E-Trade Chief Compliance Officer and Frontline Compliance Founder and President, Amy Lynch. Amy, that was Vlad just speaking earlier on the show. Wide-ranging interview ahead of this debut here today. But I wonder what you think specifically about the risks around this company, especially since we did get 2 more regulatory probes disclosed ahead of today's IPO.
Thank you for having me on the street today. Yes, Robinhood is a very interesting entity, and they go public today under the umbrella of several regulatory and litigation cases pending against it still, others that were already settled and disclosed recently. When I added up the numbers, just since 2019, they've paid over $127 million in fines and restitution to regulators regarding the cases that have been brought against them in recent years. So there's a lot of risk there, and it's still ongoing. They did a very good job, actually, of disclosing all of the risks related to regulation and litigation cases against them in their prospectus. There's a whole section on it. It's about 10 pages long, as a matter of fact. And they mention cases even that are still in the works, as you mentioned. And those 2 that have not yet been settled are one regarding the registration status of the 2 firm principals, Mr. Tenev and Mr. Bott, and then the pending investigation regarding employee trading activity when they halted the GME and AMC stock trading earlier this year. So there are cases still out there. There are many state-level cases even still out there pending. So it's a spider web of litigation for them.
Yeah, I just want to note that this IPO price is 38 right now. It's indicated at 39.75. We're going to continue to keep an eye on that this morning ahead of those first trades, which are expected a bit later today. Amy, just in terms of that spider web, all the regulatory scrutiny that this company is getting, is this really more of a reflection of a tech company that is focused on finance and financial markets and services that is essentially been seeing growing pains given that unprecedented situation, or I guess level of so-called meme trading and everything else that has kind of taken roots throughout the pandemic and especially earlier this year? Or is it have more to do potentially the fact that they've just been able to engage so many more retail investors and bring them into this market in general?
It's probably a little bit of both. Robinhood is a firm that has democratized finance, as they like to advertise, and they've actually done a pretty good job of that. You mentioned some numbers earlier with the millions of accounts that are on this platform. I think it's number 3 as far as online trading platforms go right now, and they have grown exponentially just in the past 5 years. So that alone will bring attention from the regulators onto the firm for sure.
Shepard Smith here. Thanks for watching CNBC on YouTube.